great to be here. I'm Chris. This is Nancy. I thought everybody was bringing their dog. But here we go. You're going to love this one. She is financial services watchdog. Beautiful. Far more than enough from me. My role here is to be as good as invisible, so I'm going to do that right now because we have a grandest of grand fromages with us to kick off. The man who has not the smallest of tasks to effectively run everything that is data and digital inside Nat West. Zach, welcome.
Thank you. I think that might be overselling it just a little bit. So.
I'm trying to get a gig with Salesforce as well.
I think you better oversell them then.
So, California, what are you doing over here, man?
Yeah, you can tell from my voice. In 2020, I actually was looking at what I wanted to do with my life after 15 years in gaming, and decided I wanted to join a bank and do something meaningful. And actually, open banking was the reason that I chose the UK. Allison put me in a headlock. But other than that, it was really about what I thought could be done with data here because of open banking. So that's why I came.
We are absolutely delighted that you're here because I think, as we all know, if we get this right, and it's going to be half of the big players like you, it will not just be for finance, it will be for the whole of the country. So almost 5 years into this journey, how do you think it's been for customers so far?
I mean, it's pretty amazing when you look at just the plain stats of something like 10% of the adult population is using open banking. That's pretty incredible. And also a little disappointing, probably. So both things are true in my mind. As we talked about at the index, actually you guys, not me. I have inherited a great set of tools in the open banking rules and standards and CMA 9. I just think we need to go further and faster.
And if you were to score that now, after almost 5 years, how would you rate it out of 10?
Out of 10. I don't know. I would say the first 3 years a 10, and the last 2 years maybe a 5.
That's fair. And as with all of our inventions, more than 20 countries now set up their open banking framework. What do you think we need to do in the UK to keep ahead of the curve, and what are you doing at NatWest in that space?
I'll speak about NatWest first. We believe that it's the future of our bank, and that we're investing in that. We're funding things like this to be able to help guide us on where we should be going. But I think for me, it's we have to expand the number of participants. We have to think really carefully about where real value is going to be generated, and we need to experiment. Right now we're one of the first banks to be doing variable recurring payments. We're selling customer attributes and verification based on the open banking standards. Those are, I think, big things that we need a lot more participants in to be able to make a market of one. It's nice to be first. Certainly I say that to the executive committee, but we can't make a market by ourselves. So we need to get moving. And I think we need, as an industry and a country, we have to set more standards around that and keep going.
And what else do you say? I think if you're right in highlighting it is a mission. There's no two ways about it. What else do you think we need in that broader mission?
We have to get, I think that I said it, we have to get beyond the CMA 9. We need a much broader set of participants in the marketplace. I think some of the other countries have set some nice standards like reciprocity, which is if you consume, you produce. I think some of those things are things that we need to be actively doing, not just debating.
And we see from the research from the index, the critical importance of the mandate in that initial stages. What do we need to do then now to have that self-sustaining approach? And that was difficult to say, even though I haven't even drunk anything other than water. So I'm not even going to ask any of you lot to try and say self-sustaining. Don't even try it, not even at home. To be self-sustaining now, really keep this ecosystem going, having had such a good start with that initial mandate.
Yeah, I mean, I think there's a couple of things. So I won't say that increased. I mean, that there's a couple of things that I think about a lot, which is, when we're doing something like variable recurring payments, it's actually quite a hard business case to sell inside the bank. Not because it's not a good idea, not because we don't think it's the future of what we're doing, but it's quite a hard business case because the first mover can't make the market. There's not, the people wanting to consume it don't want to invest in consuming it and connecting to us. And it just doesn't work in flows for FinTechs, and so it's a very hard thing to get going. If we had clearer mandates around real valuable areas like that, I think that we would be able to overcome some of those things. Or if we had broader participation, then people that are making the investments on either side could see a long-term market that has a much more surety to it. And right now, that's not clear. Not clear to my executives, certainly probably not clear to all of yours.
And to that end, and I very much recognise that situation, how much do these issues come up in ExCo conversations, in board conversations, in conversations when you discuss with your other CDO peers outside the bank? How much is this being discussed?
I mean, well, the difficulties are being discussed a lot, I think. I think we've done a lot of discussion in some of the joint committees. I mean, some of the consultative committees, but I don't think we're getting a resolution. It's one of these frustrating things where you can see the market, you can see what's happening, and it's actually not that hard to get a path forward. Certainly not technically, it's not hard. But we have a collective action problem to solve. And I think coming from the States, and we talked about where the States is at, I think the States gives us a dangerous precedent, which is that a lot of the activity happening in the States is being driven by the largest companies, by BigTech, because they can go out and sign partnerships broadly, they can set their own standards, and they have incredible resources to do that. And that's not, the goal here is to generate competition and to generate innovation. That is not a way to generate innovation, but they're all looking at our marketplace and saying, it's pretty close. If we invested some, we might be able to get it over the hump. And just look at Apple's activities. And I'm a big fan of Apple, but I just think that's not necessarily a highly competitive market that we all want. It's certainly not a FinTech market that I think we're trying to create here. And so that worries me.
That is a very good point to highlight what actually is an effective innovation ecosystem. I thought I was mishearing something you said there. It almost sounded like you said pre-2020 the US gave themselves a dangerous president.
I'll stay away from that one.
I'm mishearing things now. It's all the senses are going.
I don't think we want to get into a battle instead of comparing leaders here.
No, exactly. I think we're all on a bit of a time of it. But the great thing is that's all in the rearview mirror, folks. It's all sunny uplands now. It really is. So as you mentioned problems, we might as well pull another one out of the bag. I think this is a big one for me, and it certainly came out in the index, differentiating where you could see the whole question of digital ID and countries that had done, shall we say, a better job on that than the UK. So what are your thoughts all around the whole digital ID question, and how will your APIs get into that space?
Yeah, I mean, I think that's one that certainly looms big in my mind, and certainly in our discussions. I mean, the number I think is 300 million digital ID calls in the UK, and Sweden alone is 9 billion to the bank IDs there. Just a massive difference. And I think that, again, we have some choices. I mean, certainly the big tech companies want to provide IDs, and they're racing towards that. I think, as a bank, the banks invest hundreds of millions in generating and verifying identity every day as part of the regulations. It would be a huge boon to us profitability-wise if we could offset that by leveraging that and making it more widely available. But I think it would be a huge boon to, again, the innovation, the startups, the whole of society. But I'm extremely excited about the opportunity that presents. I'm also very worried that it's an even bigger collective action problem than expanding from CMA9 or many of the other collective action problems that we have to solve. So, as I said, we're racing ahead. We're investing a lot internally to prepare our systems for single digital ID, clean up 300 years of bank IDs inside of our own bank, and we're stepping towards that with attribute verification, age verification as parts of our services. So we have a very strong position that I think we would like to have a digital ID available in the UK for lots of good reasons, for society, for ourselves, for competition. We'd obviously prefer to be playing as part of that and have a revenue source, but actually we'd be quite okay if it didn't. But again, it's a big collective action problem that I think I don't see a path to overcoming that right now. There's lots of good innovations, but there's no lighthouses that everybody's jumping on.
That's a fair assessment. I mean, you put your finger on it. It is such a critical element, not just to open banking, but clearly to all fintech, to all of the advantages that we can potentially take from all the new technologies. So I think that's well identified. And on that, open banking, expanding to a wider array of product. Excited by that? What are you going to be doing at NatWest in that sense?
I mean, we have a quite a long. These first two forays are just dipping our toe in the water. We have quite a long list of products and APIs that we'll be bringing out as part of our future roadmap. So I think we've seen great engagement on the first couple areas, and we have good market evidence and interest from more, and we'll be continuing to drive this forward. Again, it's a part of our stated strategy is to drive fee revenue through our open banking APIs.
On that specific, in terms of product in the open banking space, what's difficult? We're amongst friends on that point. Share some of the kind of horror moments and the staring at your shoes moments, if you'd like to.
I don't know. A lot of them are in the bank because we're displacing products that the bank already sells. So that makes it a tough conversation at times to decide to displace something that's being delivered through another means. But I think we have to. You look around at other industries. I think about Ophoto and Kodak a lot in that, and they were the first to be able to upload digital photos. But the problem is they told you had to print them out or continue to keep them. Just wrong market-wise, but didn't get on them. Didn't see where things were going or how it worked, and took their old business models and their old revenue streams as a means to protect them. And I think we have to be bolder than that. Those are probably the biggest, on a day-to-day basis, those are the biggest challenges we face when we actually get something to market, get the technology sorted out. The response from the marketplace, I think, is quite exciting. It's the best part of the job is when you put something live and people are knocking down your door to get it and asking you about how to integrate it and where you're going, what your roadmap is. That's pretty exciting. So I think actually the hardest parts are internal.
For sure, probably as you raised Kodak, probably only fair to give a shout out to Blockbuster as well.
They just got it wrong. That's the thing that I think about Ophoto is Ophoto and Kodak is, they were in the wrong business, but actually they sold more digital cameras than anybody else. They dominated the digital camera market. They created the first photo sharing app, and then blew it because what they were trying to do was protect their chemical business as opposed to recognizing that they should abandon that and move to something totally new. So that's the warning. And coming from gaming, it's an industry where there are thousands of new companies launched a year, and more thousands fail and more games fail, and so I'm quite nervous all the time about missing what the next trend is and making strategic choices that really impact the company. So.
That's a good nervousness to have, I think. And in that, I think we all want open banking to become a family phenomena, a community phenomena. What are the difficulties in standing up a family product in this space?
Product. I don't think that. I think fundamentally, although there's some good innovations in the marketplace right now, but I think fundamentally we don't think about network relationships as the way we think about finance. And you can see it in the way even the big banks were built, right? They're built on accounts that are immutable for your whole life. They don't have any concept of changing those accounts. It's really hard to add somebody to your account, which is kind of crazy. I'd love to add my nanny to the account and then be able to drop her when I get a new nanny or when she leaves. But that's a really difficult thing to do. So these kind of ideas that accounts and sharing of both the data and the payments is fluid and changes on a regular basis, and we all have network relationships, is not built into the way the account structure is built right now, and not built into the way I think people think about finance very often. But it's the way we want the world to work, right?
Final question, it's the biggie. 2023, it's going to be an interesting year. It's going to be a massive year across financial services, a massive year for banking. How do you see it? How are you going to navigate through it? What do you want to be able to say to me when we speak at this point next year?
I would love to say that the JROC had really clear mandates. That's what I would really love to say. I think that would set a standard forward for us, and that we had a much larger expectation of market participation within the next couple of years for open banking, I think those are really fundamental for us to be able to even get to anything like what the ambition is around open finance. And so I'd love to see from there a path forward, and also a focus on where there's real value in the marketplace. I think we have enough participants in the ecosystem now that can give their voice to where there's real value. But we have to listen to them, and we have to take the use cases and ideas that they have and push those into those mandate spaces.
Ladies and gentlemen, somebody who clearly is and will, and we all need him to be, a massive player in this open banking space. Give a big, up in the clouds, whoop-de-dup-dup, round of applause, Zach Anderson. Absolutely. Just when you thought the heavyweights on the stage couldn't get any heavier, they have. I realise I don't have the brain power to compute for the next part of this, but luckily I put an implant in before I came upstairs and we're all good, and nobody's realised it's all been AI from me so far. So yeah, invest, it's the future. Good, carrying on from where we were with Zach, going to start with Nick. I think we all agree, Nick Ogden, not a FinTech founder, but in many ways the founder of FinTech itself. So 2023, Nick, how do you see the situation with open banking in the UK? How's it going to roll out this year?
Big question, Chris. Big question. I think if you just look back at where all of this came from, it's an interesting place to start from. And I remember being at the launch of the Nesta initiative, where we were trying to give £1.5 million away to stifle and create innovation for consumer apps for open banking. And somebody turned around to me and said, open banking? I said, yeah, it's really exciting. They said, does that mean that branches are going to open on Saturday morning? And I think that's part of the challenge. People don't really understand what we're talking about. In this room, we think we perhaps do, and we may not. But I think the challenge that we've got is to come up with use cases in 2023 that are compelling for the role model that we've always used in all of our businesses, which is a lady called Mrs. Smith of 3 Acacia Gardens. And she's a typical C consumer. And she gets out of bed in the morning, she has her kids and all the rest of it. She's got to understand the value of something before she commits to it and before she reuses it. And I think the challenge that we face is that we've all got great ideas, but we haven't consolidated them into a proposition that gets her to say, actually, I need that. So I think that's 2023's challenge. And interesting to see that the CMA 9 does need to expand out, right? But you need to beat the PRA up first to get them to understand that.
And on that then, Nick, going for the positivity monitor, how positive are you on January the 19th for that to come about this year? And this time I'm going to allow you to score it out of 25.
Oh, Chris, you shut to tease. I'll go 19 and a half then, given the choice. I think that the challenge is that you've got, regulators understand some things, and then they create structure in the regulatory environment. So within the PRA, for those of you who don't understand this, the CMA 9 are the main banks, then you have the also-rans like Clearbank, Starling, all the rest of it, who are referred to as challenger banks. But the way the regulator works is they're actually split up. We very rarely get to talk to each other. So I think there needs to be a fundamental mind shift in relation to communication within the regulator. And that's not a criticism, that's unfortunately just a fact. But I think that if that happens, and certainly I think that if NatWest and the other main banks are saying, actually guys, this is ridiculous, we need to be involved with the challenger banks, we need to be more involved with the industry as a whole, that groundswell will create the change which I think everybody in this room needs. So I think 19 and a half, Chris, and we'll revisit next year. That's
good, well, while I've got you mentioned the PRA, so you might as well open up to both regulators. How do you feel about in no, as you say, in no sense in a critical sense, but just an objective analysis, how do you see the role that both regulators are currently playing in terms of what we need in this space and broader across the fintech possibilities? We're obviously in a great position way back with the sandbox, replicated by over 50 jurisdictions around the world. Open banking, over 20 countries, absolutely nailing it. What is your sort of sense about the regulators that we have and what they're doing now in this particular space?
I think one of the joys that we have in the UK is, of course, we don't have 2, we have 3, or is it 4 regulators? It's difficult to work out which one does what, but they all seem to do a little bit of each other's work. And that's part of the problem, I think. So I think, get them in a room, lock them together and say, look, open banking is going to happen because consumers want to have the choice which they deserve. We don't like being told we've got to do something in a particular way. We get choice in pretty much everything, albeit from financial services. So that has to happen. So we need a push to get those people into a room, get them all together, and start them, marching, hopefully in the same direction. Bring your dog along, get them to bite him.
It's trying. It does remind me actually of a story. I was coming out of Paddington Station a few years ago with my previous dog, and this fellow was there, and he had a little dog that really started barking at my previous dog, and my dog barked much bigger back at him. And this guy shouted at me in terms, I thought she's supposed to be a guide dog, not a guard dog. Multi-hatting, it's all good. Thank you, Nick. So Amit, welcome. Nick has given the UK outlook for 2023. If we take that into the global perspective, how do we shape up? How's it looking? Where are our killer points? What do we need to learn?
It's looking exciting. It's looking exciting internationally. I think we have talked about 20 jurisdictions having open banking, more than 50 plus jurisdictions actively considering it. So the scale is global today, truly. What's interesting internationally is regulators are learning from regulators. So each new version of open banking in a different geography is an improvement on the previous one. And you could almost look at Brazil, who started later than UK, but I think in terms of scope and coverage, they're bigger and greater than UK, and they're expanding fast. I've been recently involved with some regulators in Middle East, and the scope again is very, very ambitious, will be 5 times more of Brazil and 10 times more of UK. So that is the scale of ambition we are talking about in this space. I think what is also interesting is the branding which we have internationally. More and more I see some of the stuff coming up, people are talking about open finance. Open banking is almost a term of the past. So some of the new regulation and some of the new conversations are all about open finance. And if you see some of the new index, this index also is called Open Finance Index for a reason, because that is the terminology we are using internationally. So open finance is here to stay. And taking that concept one step forward, you also have the concept of open data, which is really other industries outside financial services starting to share data. And I think that will be a very important thing, because and everybody, whether it's banks or non-banks or FinTechs, need to understand, what will you do with all of that data? How can you make maximum benefit from that data and really benefit your customers, your stakeholders, etc. I think the other important thing for me is what's happening in North America. So North America traditionally has stayed away from open banking, but recently in Money 2020 this year, they announced that they're going to reduce regulation. And North America, like us, has lots of different regulators, but this is the consumer credit regulator who's going to introduce regulation which will affect cards, wallets, virtual cards, and all types of credit-related propositions in North America who are going to come under regulation. And that is going to open up a totally different market. And the reason why that is exciting is there's already a lot of innovation happening in that part of the world without regulation. And I'm very interested in understanding what does additional regulation bring in. And does it actually stifle growth in that part of the world? Because I've been thinking and debating about this for quite a while, that where is the balance between regulation and innovation? Do we regulate more, and does that get us to the right place? Or is there a more delicate balance to be maintained where we regulate a little and let the market and participants, including FinTechs, innovate on behalf of everybody? So I see some of these things getting clearer and panning out over the next 12, 24 months. But yeah, we'll wait and see where we are.
So on that, I think it's great to tie into that innovation point. Give me your podium, gold, silver, and bronze. Where are you seeing the 3 nations you've got on your innovating podium?
So I think I would go back to one of the conversations we were having earlier around how is open banking happening in various geographies. Is it regulator driven versus is it market driven? So I think definitely market driven economies are innovating faster, but that innovation is not happening consistently across the entire economy. I'll give a very good example of Singapore. I'm a big fan of what's happening with open banking in Singapore. They were actually the first people to put an open banking framework in place, even before UK, where it was just a framework. So the thing with innovation versus regulation is if you just leave it optional for everybody and it's not regulated and mandated, few people take it up and then it's just some companies doing it, but it's not a market-wide phenomenon. Whereas what we saw in UK is that it got adopted on a market-wide basis, which is why UK at a fundamental level is more successful than in Singapore. And I know I'm not directly answering your question, but I think some markets like North America, especially around corporate banking, transaction banking, treasury, etc., have done really well in the innovation space. They're not done so brilliantly in retail, whereas markets like UK and Singapore are doing much better in the retail space within open banking and open finance. And example, NatWest, have done really good stuff in the last couple of years within this space.
You certainly don't have to apologise for not answering the question directly. I spend my life with people who the Singapore reference that you draw is a good one. It's interesting how you talked around innovation and regulation, the interplay between those 2 threads, which is critical. How much do you see what the MAS does in Singapore being part of this, with them having much more of a mandate on the economic front?
So if you think of the Singapore story, MAS came up with this open banking framework in 2015. the banks looked at it and said, yeah, some banks like TBS and UOB adopted it and they are one of the market leaders, but that was without any regulatory mandate. But what they failed to figure out, and the big use case in Singapore in 2019 was, hey, we can't even get accounts and account segregation done, which was such a common hygiene use case in a place like UK. And then they realized, and then they reformed that entire framework in Singapore, where they create SGF Index, which is a consortium of banks. And it's a very hybrid model where it is regulator promoted, but really industry driven, around how the 7 or 8 largest banks and 8 largest insurers in the stock exchange in Singapore is actually exchanging data, all for driving common customer benefits and new innovative use cases.
For now, thank you very much. Moving to Ben, payments. It's such a critical part of all this, but there's a lot of slow. How do we get some pace? How do we put some rocket fuel into your world?
Yeah, absolutely. I just want to first pick on Howard's point. I completely agree. Like, these things need to be mandated, otherwise they don't happen. Like, we need a lot more of that. Yeah, in payments, we're pretty used to things moving slowly, right? We talk about decades, and the default is kind of decades. And there's a quote I nicked off somebody that there's no cliffs in payments. Things take ages to change. I think it was only a couple of years ago that we saw volumes of debit cards go up above volumes of cash. Yeah, these things take a long time to change. So we are used to things changing slowly, but that doesn't mean to say we should accept that. We should go, how can we supercharge this? In a sort of slightly Californian product management style, we always talk about things being 10x. So if you want to supplant, or if you want to replace existing solution, it needs to be 10 times better. Otherwise, people just aren't going to care. People aren't going to really change. And if you look at the way open banking payments are working in a minute, the kind of use cases where they're doing really well are in places where something like cost is 10x better. So we Carlos, see a huge uptake among saving investments. So you're moving money to your ISA or to your stocks and shares or whatever. If you're moving 10, 15, 20 grand, the percentage difference in the fee is quite a lot, and the actual absolute amount can be genuinely 10x. And so we see huge amounts there. And in the HMRC, I know it's in the index, there's sort of the almost 10 billion that HMRC have collected in taxes using open banking. We've seen estimates that save them £500,000. Like, that's meaningful. That's meaningful. But beyond that, beyond those kind of niche use cases, or not niche, but beyond those specific use cases, how do we make sure it's like 10x for these other areas or these other things? And there's probably a few things there. The first thing is kind of table stakes. I think we need to see the APIs at the level that they've been mandated being put in place in a consistent way. It really varies across banks. And there are banks we see where the stuff that black and white is mandated and it's just not done. And then the quality with which things are done really varies. Some are really putting in the work and they offer kind of a really best-in-class experience and it's excellent to use. Others just really kind of lagging behind. We need that consistency. You can't offer a product to a merchant where you're saying it's going to vary. What you get back is going to vary depending on the payer's bank that it's coming from. They don't need to care about that. Secondly, I think we need to be a lot more ambitious with the set of use cases that we're going after here. So, think more accounts, more types of payments, more types of organizations holding those accounts. And VRP is a really good example, very variable recurring payments. I think the example being set by NatWest is brilliant. And if there are any banks here, I'm sure there's a few. Do the same, follow NatWest's example. We will pay you, we will come, we really want this. We're so excited about the impact that variable recurring payments could have. And we need more of that. We'd love a hero use case. So, I don't know, maybe we regulate that it needs to be usable for, say, utility bills, right? The same in direct debit. The reason everyone knows what direct debit is because it's how you pay your water bill or your gas bill or whatever. What if we did the same for VRP and suddenly everybody knows what it is, everybody trusts it, and you can start using open banking payments for other things. There's a couple of other things. One is we sort of think about it as filling in the potholes. So there are some areas where the open banking payment methods just kind of have things that they're always there, but they just kind of get let down, like high value transactions. So transactions over 10 grand are 10 times more likely to fail than those below 10 grand. And open banking is brilliant for collecting high value payments, but then we've got this kind of this thing in there that just makes it sort of stop quite short of being absolutely perfect. And then I think the final of the four things is we need, I guess, better alignment and better, like, collective prioritization of where we want to improve things. So I'm thinking particularly about the ASPSPs, the banks. It must be pretty tough. You're getting pulled in lots of directions. There are lots of things you're being asked to prioritize for. And we should go, as an industry, as a group, okay, this is where we think the real problems are. Like, I don't know, are you optimizing for reducing authorized push payment fraud, or are you optimizing for reducing the friction that are in the payment flows? They're kind of things in orthogonal directions, and how are you trading those off? And are all the banks trading them off in the same way? Otherwise, you're going to end up with this really weird, inconsistent experience.
Thank you very much indeed. And coming to Rashee, welcome. Talked about payments. Let's talk lending. Where are we currently at with the government credit information market review? What do we need to do? How can the community get involved and get stuck in?
So the good news is the FCA does realize in the discussion paper that open banking has great opportunities within the lending market space. And with the rising cost of living crisis, which is probably something we don't like to talk about, but lending plays a very key role because credit and borrowing will increase, and ensuring that responsible lending and borrowing is also there as part of what we work at, in financial services. So with regards to open banking, yes, it has several different opportunities alongside FinTech. There are so many providers providing, free credit reports, financial education, how do you spend and budget, budgeting tools, affordability tools, and all of these are in the hands of consumers right now at the end of the day. So the good news is, UK, with regards to FinTech, I know open banking, we're around 10% adoption, which is still not bad. But FinTech adoption is almost 80%, which is pretty much one of the largest globally, which means 8 out of 10 people have a FinTech tool, which means we can really, really try and leverage open banking and provide that financial advice, affordability tools to all the consumers who are out there. So I think with open banking and lending, it's basically providing a straightforward and real-time overview of a person's credit history instead of, back data, which a lot of people might not even have. With COVID-19, as we all probably realize, that credit history is just part of a person's, financial journey. Things can change drastically. So having real-time information and forward-looking information is very, very important. But like all my peers have said, it's not only about open banking, but about open finance as well. And this is something that Innovate Finance would like to see as well, because right now, open banking just covers banking data and payments. It does not cover savings, investments, pensions, mortgages, and this is extremely important as well, that, we move towards that, and perhaps the Digital Information Act, as well as the Data Protection Act, is a great way to move forward, and it provides a great opportunity instead of being just and promoting competition, but it also provides a legislative mandate for a lot of the consumers to be able to open up their data sets to get more valuable products and services. So yeah, I do think open banking is here to stay, moving on to open finance, and it's really going to help responsible lending, just to ensure that our customers and the data is in the hands of customers, and they basically get the best financial products and services in their hands.
So you've rightly identified 8 out of 10 FinTech take up, 1 out of 10 open banking take up. In your view, why?
I think it also has to do with financial education. So FinTech, what they've done really well is making the user experience very seamless. Back, 5-6 years ago, changing and switching your bank account was a tedious task. Or if you're moving your jobs and you forget about your pensions, how many pension accounts do you have? But for example, like a pension bee has made it really, really easy. Or Lockbox has made it really easy to get a free credit report instead of logging on to your traditional bank accounts and trying to get that. And a lot of these services are also provided at very low cost, and it's very transparent with customers. And the fact that PSD1 and PSD2 have come forward, I think that really gives customers that sense of trust with a lot of the financial products. FinTech has been around for, I think, close to around 10 years now. When I joined the industry, people didn't really know what FinTech was. So it has really built up that trust over the years. But with open banking, I think it's a lot of customers don't really understand that it's actually putting their data back in their hand. And it's them deciding who and which brand and which company should be getting their data sets. So I think a lot of financial education is needed out there, and hopefully making standard APIs and making it seamless for everybody. Like you said, Nick, it's about getting everybody in the room together and ensuring and saying open banking and open finance is happening, and how do we basically standardize that data for everybody.
You've rightly taken us into the open finance space, and what an opportunity that is. To your mind, just hit us up with a few things that you think we need to do to increase the pace towards something which in the UK can really start to look a bit like open finance.
Yeah, so I think pushing on the legislative side is extremely important, and ensuring that customers understand, firstly, why it is important, and as the UK government and regulators come together, it's about the Data Protection Act as well as the Digital Information Act, and ensuring that is pushed into a legislative mandate. And I think organizations very much like the OBE or Innovate Finance and other industry bodies really need to come together as well to, in front of parliamentarians, regulators, Bank of England, FCA, and getting the community together really to explain why this is so important. And I think that's why the work is absolutely splendid, and we're happy to support wherever we can. But the community needs to come together, whether it's banks, FinTechs, regulators, everybody needs to be in the room together at the same time.
On that open finance, Amit, your thoughts on what more we need to do?
Yeah, I think Rashee covered the regulator angle. I think all of us are eagerly waiting for the JROC report. I think it will have a lot of implications in terms of how we graduate from open banking into open finance. Consumer education is important. People need to understand what is this about. My biggest thing is in early days of open banking, I think we looked about this in the wrong way. Everybody started chasing the killer use case, and that actually hasn't existed. Nobody has found it. We still talk about let's make the open banking payment. Why do I need to make the open banking payment? I think it's the other way around. Let me pay my tax, and incidentally that is followed by open banking. So my thinking is that if we are to make people understand the benefits of this, we need to start thinking about the use case which they use on a day-to-day, and really show them how the experience around that use case could be improved by open banking. So whether it is making your tax payments to HMRC, which is powered by open banking, whether you want to collect more club card points in Tesco because if you pay by open banking you get more, or whether you are building a digital wallet for your new business, and incidentally all of the account aggregation, money movement in the wallet is powered by VRP and account aggregation. So I think we need to start thinking the other way around, and that will drive adoption, and we will get into the world of open finance faster than what we are trying to do now. Searching for the killer use case may not work for everybody.
And on that open finance, Zach, how much is it talked about in NatWest? What sort of conversations and what are you focusing on to really get us into that journey, if not that space?
Yeah, I mean, quite a bit. I mean, we have the same debate here inside. How much should we invest? What should we bring forward? I mean, we know we want it. I think there's a great desire among leadership and the bank to move in that direction. The question is, what's the return on the investment on it? And without clarity, it's a little hard to figure that out. I mean, I think we're racing forward, making a bet on it. And then I think the other question that comes up a lot is what can we do? So if we can't rely on clarity of where it's going, what can we do in partnerships and other areas to just start making it happen? And that's the go-cardless relationship, right? Is that we're just going to go and start doing it. And if we can build a business case around that for ourselves, even if it's not the best one, we'll try to make it happen and see if we can and see where it's going. And I think that's, so we kind of have both debates. All right, what is we still look for a killer use case, of course, and a killer business case, because the investments aren't tiny. but we're definitely doing both, trying to influence and drive forward and look for clarity, and at the same time, not wait and see what we can make happen.
Brilliant. Final quick question to each of the panelists. One ask of government, of the regulator, or of somebody else who you'd like to have one ask of to really turbocharge 2023 for open banking, for open finance. Nick, one ask.
Okay, I'm going to change the rules a bit and ask Zach this. All right. What you just said around creating a business case is probably one of the things that's holding all of this back, because the consumer's business case is they want it faster, quicker, cheaper now.
They don't want to know it's open banking, they just want it.
Yeah, and the irony is that, believe it or not, it's their money you've got, not your money you're looking after for them. And is that really the problem that we need to get around, that the whole thinking and mentality of money management needs to change, so that effectively we go back to not a cash society, but a society where we control our own cash? Because I think that then takes the brakes off.
I mean, I think it's a great shot. It's not the only one, right? We would like to go back to a society where we control our own data, which we don't have right now, too. So I do think there's a cultural element to it, but I kind of, if I'm honest, I hate saying culture because it's a cop-out. I think we just got to get on. Yeah, we know it. We know it. My answer is, expand the mandate. Period. That would have a huge impact. Broaden the industry set. That would have a huge impact. Be clear about what it is. Let's not create mandates on things that don't have any value. We did some of that before. It costs lots of money. Let's actually come together on what the right mandates are and be clear about them. And let's go. And if not, we'll probably be more like the U.S. and it won't be as competitive, but it'll still happen. It's just going to be done by people that have enough deep pockets to go and make partnerships. But I don't think that's what we want.
Very good. Rashee, one ask.
Yeah, I think I would agree with Zach, actually. Expand the mandate. And we're actually, part of the working group of the Strategic Open Banking Advisory as well. And we just want to see basically, where is open finance? Let's put the structure together and let's get the ball rolling.
Ben.
I'm going to beat the same drums before. Mandate or variable recurring payments for a wider range of use cases. I'm happy to pay, but if you mandate it, we can create this thing. It'll become really powerful.
Amit?
I think I would like them to think about creating more consistent market infrastructure, things like directory have really helped growth. What else do we need? Is there something which all participants, banks and FinTechs need in common, and what role is the regulator playing in building more of it? Example, digital identity.
That's a great act.
Yeah, very good. Ladies and gentlemen, our great panel, Nick, Amit, Ben, Rashee, and our fabulous fireside chatter, Zach. Make a lot of noise!
Thank you very, very much for hosting our panel. It falls to me just to gently wrap things up. So first of all, let me say a few thank yous. Obviously to the panel for a stimulating discussion, to Lord Holmes, to Chris, you have been wonderful again, and Nancy, she has been so patient. So if that doesn't encourage you to lift your phone and make an open banking QR charity payment, I do not know what will. I would also like to say a couple of other thank yous. You're about to go and have some amazing food and you have earned a drink. That has both been paid for by our sponsors this evening, Salesforce and Go Cardless. You've met Ben, but in the audience you also have Yana, Tony and the team who, please go and say hello with a drink in your hand, and please thank them. I would also like to say a quick thank you, and they're not expecting this actually. Ladies, it takes real people to make things happen. I would like my team, Kaylee, and from, where is she? The very gorgeous Aman from Salesforce. Ladies, just come up here and take a bow. They have made this happen, not me. I stand here with a mic, and I send a couple of emails. It is these two ladies that have made all this happen. Thank you very much.